This is TechCrunch. General Compute, an AI inference cloud startup, has landed a $400 million loan from Upper 90, a tech investment firm. It might be the first deal to put up inference-specific chips as collateral, chips built to run already trained AI models quickly and efficiently, rather than the more expensive chips used to build the models in the first place. The financing is the latest signal that markets are responding to concerns over the price of AI tools and tokens by turning to infrastructure that runs open-source models more cheaply than the newest LLMs from Frontier Labs. Founded by CEO Finn Peklowski and CTO Jason Goodison, General Compute raised a $15 million seed round back in May to build an inference neocloud around silicon from SambaNova, an Intel-backed chipmaker. Neoclouds are purpose-built for AI workloads, unlike the general-purpose infrastructure offered by traditional hyperscalers like AWS or Azure. The company's SN50 chips are designed for inference. They're power-efficient and do not require expensive water cooling systems, which means they can be deployed more quickly than GPUs across a larger variety of data centers. General Compute says the new chips will provide 16 times faster inference than GPU-based clouds. Now, the challenge is getting a lot of these chips, especially when you are a brand new company. Upper 90 co-founder and CEO Billy Libby, a former Goldman Sachs quantitative trader, had a playbook for that. In 2021, his firm financed GPU purchases by Crusoe, the energy-focused data center startup, which he believes was the first loan against the value of advanced chips. Traditional lenders eschewed such deals at the time because of the risks and uncertainties around GPU depreciation. But as CoreWeave made chips-backed loans into a business model and then the basis of a blockbuster IPO, well, this kind of financing has become common. Libby told TechCrunch, "When we financed NVIDIA GPUs as the first group to do that, the market was inefficient. We could really put together something as an early participant and kind of get compensated for the risk. Now that GPUs are comparatively well understood and perhaps overbought, Upper 90 is turning to companies like General Compute to ride the next wave of the AI boom." Libby said, "We think open-source models are going to be important, and we went and looked for the player last year that was an inference. Everyone doesn't need a supercomputer, but they do need inference and AI." That thesis has been growing stronger, with companies that provide access to open models like OpenRouter and Fireworks, raising new rounds at huge valuations. New models like Kimmy's K3 have proven to compete with the latest releases from Anthropic and OpenAI on coding benchmarks. And new chipmakers like Grok and Cerebras have drawn interest from acquirers and public markets alike. General Compute's ability to access chips outside of NVIDIA's ecosystem matters for the same reason. TensorWave, another AI infrastructure company, is making a similar bet on a partnership with AMD. As more alternatives to NVIDIA emerge, compute providers that are not locked into NVIDIA deals may have an advantage in providing cost-efficient inference. Peklowski said, "There are a bunch of chips that are starting to scale that have amazing total cost of ownership or that can operate much faster than NVIDIA, but there's not too many buyers for them. By getting together with Upper 90, this is not just a cool startup got some money to buy some compute. This is the first signal of capital organizing itself and the fragmenting of NVIDIA's monopolistic dominance." Oil giant BP has had an on-again, off-again relationship with climate tech. Now it's definitely off. On top of pivoting away from clean energy earlier this year, the oil giant announced last week that it was selling the majority of its venture portfolio, more than 10 companies according to the company, to Verdane, a Nordic private equity firm. Since BP launched its venture arm in 2007, it has invested in a wide range of industries, many of them focused on the energy transition, including green hydrogen, e-mobility, ride-hailing, autonomous vehicles, private jet charters, and geothermal energy, among other sectors. In a press release, the company said it would retain interests in a small number of investments where the technology has the potential to create value for its businesses. When reached for comment, BP declined to specify which companies it would be keeping. The company also declined to comment on the fate of BP Ventures employees, citing local legal and regulatory requirements, though layoffs seem likely. BP expects the portfolio sale to be completed in the second quarter of 2027. Now, over the years, BP Ventures' varied investments have not been terribly successfully financially. Axios reporter Alan Newhouser said last year that the portfolio was valued at about $1.2 billion, or roughly the same amount that the company had poured into it since establishing the unit in 2006. So, X is taking a tougher stance against people who try to abuse its creator revenue sharing program by soliciting engagement and stealing content from others. It's common for viral content to be recirculated, especially on platforms like X, where that content can be rewarded with likes, follows, and in some cases, cold hard cash. Instagram, Facebook, and Reddit also deal with this problem and have implemented some technical measures to discourage such behavior. For instance, tools that detect when a user has reposted someone else's work without giving them credit. X recently tried its hand at this as well, adding an improved video editor and recorder to its platform in an effort to encourage creators to post using X's own tools instead of stealing others' content. Now, Nikita Beer said X's newest version of the Grok AI model can detect duplicated content at thrice the rate of its previous version. Plus, adding watermarks, intros, and other edits meant to fool people into thinking stolen content is your own will result in sending the monetized impressions to the original uploader. This will also include copies of viral text posts. Beer said the company has detected 1.5 million posts that were stolen in its latest cycle, though he didn't mention over what period that cycle took place. He noted, however, that with the changes, over $1 million in creator payouts will now be given back to the original creators of the stolen content. Because many such problems are enabled by AI, X has been working to suspend bots more quickly as well. Back in April, Beer said the platform was identifying and suspending 208 bots per minute, and growing. X now says repeated or intentional attempts to circumvent its new policy will result in users being removed from the creator program, as will efforts to solicit engagement and follows. In terms of the latter, if a user is busted 3 times or more, their account will be removed from the creator program and forwarded to the platform's policy team for suspension. Beer has complained about engagement bait on the platform before, and even went after top creator Mr. Beast for always using financial bait to get people to watch his videos. That's all for now. For the latest in tech news, go to TechCrunch.com.